and latest stock market news and specific news for ACB and some ideas for calendar spreads coming up next. Short Vol Show live right now on YouTube. Here we go. All right, so welcome to Short Vol Show live. My name is Dave, and we did get an announcement. ACB, I just pulled it up. It's down a little bit. Offered at $6.71 right now, which is down about 60 cents from yesterday due to a convertible note. Now, this company, which is currently valued at a little over $7 billion, $250 million in notes is not a big deal for it. And indeed, if we look at the chart, this is not much of a sell-off compared with the movement that the stock has had in the last couple weeks. So I wouldn't be too concerned about it. Here we go. It looks like all the MJs are a little bit lower. Afria is offered, well, Afria is unchanged right now, but Tilray down slightly, Canopy down slightly as well. So, and I've got no sound on my mic. Here we go. All right, there we go. And so I wouldn't be too concerned about this note in ACB. Once again, when they issue a note, they're raising money. It's dilutionary in that now there are more people that they owe money to, and thus usually makes an equity go lower. So that's the story with that. Market's down slightly right now, but that may not last. The term structure is very, very flat right at this moment. I came on yesterday and said I wasn't really willing to keep my short going right this second, just because we were kind of at the low end of the recent range for volatility. If we pull up VIX Central, though, we can see that everything's just very flat. And if you look minute by minute, it kind of changes what it sort of looks like. That's just how flat we are. Let's see what it looks like here. So right now it's tipped the scale slightly back into contango. I'm frankly surprised that the back months didn't stay up. I was thinking that the back months would stay up above 20, but they brought them down pretty aggressively 2 or 3 sessions ago. Now, everybody remember that Monday is a close for Martin Luther King Day, so keep that in mind for any of your theta calculations and whatnot, that we will be off of trading for Monday. And UVXY closed above 60, or actually closed 59 and change, but was trading up to about 61 after the close yesterday. And we'll see if this slightly down markets overnight. It's come back a little bit. E-mini's now only down 5 as we head towards the an hour away from the open here. I did want to give you a couple ideas. One of them I was talking about yesterday a little bit, which was calendar spreads. When I'm looking to do calendar spreads, one thing I'll look for is either a higher volatility stock or a disparity between the back month and front month volatility. So if we pull up, let's take Tilray for example here. If we pull up Tilray and we look at our charts, and I get my head, it seems like my head is always in the way of something. Anyway, if I move over here just slightly, you can see on the far right side of these charts here, this is Thinkorswim. It's got this listing here. It says 138%, 114%, 117, et cetera, et cetera. And we can see that, and this is very typical, where the farther out months are a lower volatility than the close months. But if you look, we've got like the Jan 21 is 80 vol, and Jan 20 is 95 vol, and then the front months up to 138. And this was actually up to 175 that day of the 15th, when quote-unquote dilutionary event was going to happen. It's come in a little bit in the front months, but still, it seems like the news is kind of out in Tilray for a while now. That was so anticipated that Jan 15th, and we did get the down move, but now we're kind of sort of in between the recent high and recent lows as far as the chart's concerned. So a good time to put on some sort of, in my opinion, sort of short premium thing. And so I'm looking at the 85 calendar, and I was looking to buy either the next Jan or the Jan after, and then sell some closer months against that. So the one the calendar I was constructing was to buy the Jan 20 85 call, and then sell something like the Feb, maybe the 8 Feb 85 call against it. And this way, basically, if we look at that Feb call, it's trading about $6. So that at the money straddle trading about $12. And essentially, what you're doing synthetically is you're sort of selling this straddle, but pegging it to a call farther out, and thus, stock sort of generally stays in this general area. You're collecting that decay, because as we know, the closer options are going to decay a lot faster than the farther out options. And thus, as that straddle slowly crumbles from $12 to nothing, we can collect that money. But as opposed to just being short a straddle, we do have a long option against it, which sort of protects us from a bigger move. Also, remember when we're doing these calendar spreads, when we're buying calendar spreads, it is a long Vega move. We are buying a farther out option that has is more sensitive to volatility changes than the closer option, and thus we are getting long a little bit of Vega. So you don't want to do this if the back month volatility is like way high in historical range, or even if you're anticipating like a vol crush, like right before earnings, you might not want to put one of these calendars on. But the way I like to evaluate some of these is just see how much sort of bang for the buck I'm getting. So if I were to buy 2 of these calendar spreads, it cost me about $2,000. And if I go over to the right side here and click Analyze Trade, I can see, okay, so for my $2,000, I'm collecting about $25 a day in theta. So you put your $2,000 to work collecting $25 a day. So it sounds like you have like a small side job that you're working 2 or 3 hours a day, collecting that $25 a day. It doesn't sound like too bad of a gig for me. And like I said, I evaluate these a lot based on how much bang for the buck, how much theta I'm getting for how many dollars I need to commit to it. I also look at, we are short gamma, so I also look at, how much does the stock need to move before I start to get into trouble. It's showing here a 13 delta, but we know that as time goes by, closer to expiration of that front month option, that theta number is going to get higher, and the delta is going to change. This is the 85 strike, which we're right next to right now, so the delta will not change that much. If the strike were farther away, we'd expect the delta to change more. So if I were just to advance this delta a little bit, maybe to the end of the month, you'll see it's gotten slightly longer, but really hasn't changed that much. When selecting a calendar spread, when selecting the strike for a calendar spread, you want to select the strike, a strike price where you think the underlying will be moving forward. So if you have something that seems to be trending up, then you might want to select a strike that's a little bit higher than where we are right now. If something seems to be trending down, you might want to select a strike that's slightly lower. And you also might want to think about skew. So thus, you're getting more bang for the buck if with most stocks, the downside puts are skewed. So you get more bang for the buck for a little bit lower strike, whereas UVXY or a VIX ETP, it's sort of the opposite, and you get more bang for maybe a slightly out of the money call than you would for a slightly in the money call. So some of these calendars are a fun way to put your money to work while greatly limiting your risk. I was talking to UVXY about how I have a calendar spread on in there, and when we get a pop up a couple bucks in UVXY, I'm less concerned because I don't really have much of a delta because I have the calendar spread on, which was offsetting my short delta. So calendar spreads can let you sleep more easily at night while knowing that you're still collecting a little money, a little bang for your buck. And when you get a situation where, like we have Monday with Martin Luther King Day, well, there's just extra bucks that are going to come in your pocket because when the market's closed, stuff doesn't move, and you're just going to collect that extra decay. So that's a good thing for people that are, long theta or short gamma or short options. So I hope that things are going well for you so far this year. And we will have to see how things go moving forward. The markets, it seems like that the sell-off that many have been anticipating just doesn't seem to happen. We get this, I kind of like this thing where like markets are down a little bit overnight and then start to come back because it seems kind of bullish when stuff's just down a little bit overnight and then it starts to crumble and come back. And it can turn into a nice rally during the day. Like I said, I'm a little surprised that the back months in the VIX have not held up a little bit more, the back month futures. I would have liked to us have lined up in contango here with back months higher, slowly going down to the front month. But instead, what we have is a very, very flat term structure here with futures lining up around 19 instead of the 20 level that they were at a few weeks ago. Let's take one last look at the term structure here, and we see it curving a little bit as we get farther out, but certainly through July, all the months seem to just be lining up very flat. And as we know, the term structure is not predictive. But when I just sort of look at it this way, it seems like this would turn into a very nice chart if volatility were to drop to, like, let's say 16. Then we could have just like the perfect contango curve moving straight down with spot being at 16 and the front month being lower than the rest. So we'll see if that actually comes to pass. To get us back into, to get the VIX back to 16 and us back into a nice contango chart, we would need a continued rally or at least continued sideways action in the market. So we'll see if we get that. I did mention this stock yesterday, GLOP. You might want to check that out. It's a company that they transport natural gas, and fairly interesting company, which I've been following as of late. Other stocks to check out might be just your Apple, Facebook, and the other one I've been watching is BZUN, Boson. Let's take a look quickly at Boson. Now, this is a Chinese stock that makes websites for bigger companies, sort of like a high-end Spotify for the Chinese market, and pretty far off the highs. Let me back out this chart a little bit. It got up to 67, and you can see really has gotten punished over the last few months. And is the bottom in sight or does it go lower? Well, we'll just have to wait and see. Other one that's interesting always is Tesla. Tesla just seems to be oscillating in this range once again. The range being like 250 to like 380, and it just seems to oscillate back and forth in that range. Tesla could be another one to look at as far as calendar spreads. Just quickly doing that, we could maybe, like I said, it just seems to bounce all over the place. So you might want to pick, I don't know, let's just pick the 350 strike for now for a calendar spread. I think this one, I've looked at it before. Sometimes it doesn't pay as well as other times. A quick look just at volatilities on the right side here. We've got 50s, 60s, and actually the front month, you know, it seems pretty flat across the board between 60 and 70. But just to do the math here really quick, if we do pick the 350 strike in January by a call, and then go to the same strike we were using in Tilray, like the Feb 8 strike, and we sell the 350 call. So I'm going to hold control and hit and press the bid. So that would cost $5,000, a little under $5,000 to put this call spread on one time. And if we go to our Analyze tab, so if we put the call spread on one time, it would be around $5,000, and we collect about 38 a day. So just gives you an idea for this one of theta. Now, it doesn't sound too bad, actually. $5,000, and you collect 38 a day. So a place to put some money where you're not making a directional kind of play. You're putting your money at risk, but sort of less risky than making some big directional play. And this one, you know, I think you just have to let this ride for a while. Maybe you pick a call that was farther out. Maybe for the one you were selling, maybe pick something like a March call, maybe. That gets you down to like $4,000, collecting 16 a day. And you could just leave it on for a few months and let this thing just bounce around, because it seems to bounce, like I said, between, you know, 300 and 400, or 250 and 400. And so another good candidate for a short premium position, because it seems to always sort of come back over time if you're just patient with it. All right, well, thanks for watching today. Those are just some general ideas of calendar spreads. Find some stocks of your own and pick some of your own candidates for calendar spreads, and let me know how they work out. All right, thank you so much for watching, and we will see you in the next one for the Short Vol Show Live.